Can the Mahabharata teach you stock market lessons? Yudhishthir-Dhritarashtra-Shakuni and the Kauravas will show how to protect investors. Have you ever thought that a scripture written thousands of years ago, filled with tales of kings, strategy, righteousness, war and destruction, could guide you in something as modern as the stock market? When every day Sensex and Nifty swing wildly, investors jump into the field with their money, and millions take risks every second hoping for profit. If someone talks about learning investment lessons from the Mahabharata in such a scenario, it might sound strange. But if you think deeply, you'll find that the battlefield and the investment market are quite similar. Victory belongs to the one who is patient, strategic, and makes the right decisions at the right time. Many signals hidden in the stories of the Mahabharata teach investors not only how to survive in the stock market, but also the art of becoming successful. Today, we will explore this topic in depth. But before that, if you are new to our channel, please don't forget to subscribe so you receive the latest updates from us first. So let's begin today's discussion without any delay. The first character from the Mahabharata is Yudhishthir, also known as Dharmaraj, considered a symbol of righteousness and truth. But when it came to the game of dice, the same Yudhishthir who upheld Dharma all his life made one wrong decision after another, losing everything he had. Now think, was the gamble just about rolling dice? No. It was about stubbornly clinging to a bad decision. Instead of stopping after one loss, he kept placing bets again and again. The same mistake is made by thousands of investors every day in the stock market. A stock falls, and they invest more into it, thinking it will come back now. Yudhishthir's biggest mistake was that he staked his entire kingdom, his brothers, his wife, and ultimately even himself. In the world of investment, this means putting your entire capital in one place, without backup, without risk management. A wise investor is one who knows how much to invest, where to invest, and most importantly, where not to invest. If Yudhishthir had chosen to stop after his first loss, perhaps the war of Mahabharata would never have happened. This is exactly the lesson investors must learn. If your investment is going in the wrong direction, stop, rethink, and change your strategy. Putting your entire capital into one stock, one sector, or a single tip can lead to financial ruin. Always diversify your portfolio, have a backup plan, and most importantly, don't be driven by greed. The most dangerous phrase in the market is, "This time it will definitely go up." Don't be like Yudhishthir in investing, who despite his righteousness, lost everything to stubbornness and greed. Now let's talk about the second character, Dhritarashtra. A king who was blind, but even more blinded by attachment. His obsession with his son Duryodhan was so intense that he overlooked every mistake, be it the dishonor of Hastinapur or injustice towards the Pandavas. Dhritarashtra always made decisions blindly in favor of his son. The same happens in the world of investment when we become emotionally attached to a stock. We fall in love with it just because it once gave us profits or because a friend or relative invested in it. But the company's fundamentals may have changed, the business may have gone downhill, and yet we keep hoping it will bounce back someday. Dhritarashtra's greatest mistake was that he chose not to see the truth. Though he was blind by sight, becoming blind in mind as well was the real cause of his downfall. An investor must learn from this that attachment and investment can never go hand in hand. If a stock is continuously falling, the company is incurring losses, audit reports are showing red flags, then holding on to it is nothing short of self-destruction. Wisdom lies in setting a stop-loss in time, accepting the loss, and moving on. In the stock market, acceptance is the trait that saves you, and denial, like Dhritarashtra, can drown you. Now let's come to the third character, Shakuni. The most cunning, manipulative, and strategic player of Mahabharata. Shakuni never fought directly. He always used others as pawns. In the world of investment, there are thousands of such Shakunis on social media, YouTube, WhatsApp groups who offer you secret investment tips. Buy this stock now, it'll double in 2 days. This is insider info. Such lines are traps for investors. That's exactly what Shakuni did. He masked lies behind half-truths and made them look appealing. An investor must be smart enough to avoid such traps. In today's time, SEBI has laid down regulations, certified investment advisors are available, and research reports are just a click away. Yet why do we still trust a random social media ID's post? The only way to guard yourself from a modern-day Shakuni is knowledge. When you read, analyze, and make decisions independently, no one can mislead you. In the world of investment, Shakuni doesn't just exist outside, but also within, the inner voice that keeps whispering, "Get rich quick." Learn to recognize and control that voice. That will be your greatest victory. Now, the final character, the Kaurava army. Large in number, low in conviction. In Mahabharata, on one side were the Pandavas, just 5 brothers, and on the other side, the Kauravas, 100 brothers and a massive army. But who won? The smaller, more focused, and strategic side with clarity and purpose. The same applies in investing. When you crowd your portfolio with 30 to 40 stocks thinking more stocks mean more safety, it often leads to confusion rather than protection. When you have so many stocks, you can't focus on any one properly. You can't study their reports, nor track their performance effectively. And when the market dips, you are left wondering what to hold, what to sell. In a portfolio, quality matters, not quantity. Just 8 to 10 fundamentally strong companies with solid balance sheets, stable management, and clear business models are more than enough. The mistake Kauravas made was believing that sheer numbers could override ethics and inner strength. Likewise, investors should go deep with fewer stocks, track them regularly, and review them periodically. Flaunting a large portfolio means nothing in the market. It only leads to distraction. Mahabharata is not just a story of war, it's a test of choices. Every character, every dialogue, every loss and every triumph shows an investor the path. When markets fall, when rumors spread, when panic surrounds you, you must ask yourself, which Mahabharata character are you behaving like? Are you Yudhishthir, betting more after every loss? Are you Dhritarashtra, blindly attached to a stock? Is a Shakuni influencing your strategy? Or has your portfolio become like the Kaurava army, large but weak? The lessons from these 4 characters are priceless. And if we truly absorb them, then the stock market's Kurukshetra can also become our field of victory.
If our video has taught you something new, do not forget to like and share this video so that this information can reach others as well. Your likes and shares are a source of inspiration for us. If you have any questions or suggestions, please let us know in the comments. It will be our honor to answer your questions and listen to suggestions. And yes, if you like our content, subscribe to the channel and press the bell icon so that you stay connected with every new story. Thank you. GRT Business YouTube channel sources, news from various news agencies, opinion polls and other public sources. We try to ensure that every report and summary is accurate and verified, but we are not responsible for any dispute or error. Our aim is only to provide you with accurate information.